Welcome, everyone, to the Kendall Report, where I share my 44 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, I haven't been on for a while, so I'm going to cover outlook for Q2 and 3. We're coming into the end of Q1, so let's get into tonight's video. Well, folks, it has been a while, to say the least, and a lot's going on. I know many of you are following me through my Substack, and I will continue to do my micro-analysis there. I tend to work late at night. I've got a couple projects I'm going to reveal to you tonight that I think are very exciting. Last night I went to bed at 6 a.m. Eastern time, so burning the midnight oil. So I'm glad to be here. I've had a family situation, as many of you know, that has been dominating my life, and it continues to do so. I have a little respite, but I think it's important. We're seeing these markets just come apart every day, and a lot of folks are, getting very concerned. Real quick, since I haven't had this machine lit up for a while, would you give me a thumbs up that the sound is good and all that kind of stuff? That would be awesome. Yeah, we're getting, somebody's going by the dip. We'll get into some details here. I think it's interesting because one of the things, typically, if we go back, let's cover that just real quick. That'll lead me into where I want to go. Also, why the room is filling up. We'll see how many folks we get to show up on this random meeting. But one of the things that we were able to talk through, we went through 23 and 24 where we had double-digit returns, and we had a positive WaveTech database. We had lots of traction in the database from the sectors and all types of things, so it was pretty easy to go in to buy the dip type scenario, and it worked out really well for 2 years. And I've been talking about this even in my 2025 outlook. I talked about the reality is that we had on the S&P it was 52.5% compounded return for 23 and 24. So do you expect another double digit? Are we just going to go up 100%? No, obviously no. And I'm going to go into a little bit tonight before we get into going through some charts and talking about some of the trends that are out there and things that are being changed by basically the new political environment we're in. I want to just talk a bit about where I think a lot of these things are leading us. And but the difference I was just talking about in the database is we have pretty much the opposite. We still have reasonable traction in the intermediate database, but we have no sectors participating. The breadth of the market has completely went away. So buy the dip is going to be not as effective as it was in 23 and 24. I know a lot of folks were telling me, I remember in 23, we had a Fibonacci projection of 6,100. And we were at like 4,300 on the S&P, and a lot of you folks on the channel were commenting that that's not going to happen. That was the previous cycle where we were calling a top. And now we came into this new political environment. Everybody got pumped up on we'll call it the Trump trade, and they ran the market up. If you look at November, and I'm going to, matter of fact, I've got this on the screen. Let's go over there. This right here is, let me get to the right screen, a little dusty here, but this right here is the S&P, and where my cursor is here, this is where the Trump rally started. So it's possible we could come all the way back to the 200-day. We're going to see some gyrations. I'll get into more technicals, but this is likely to see a sideways to down, ultimately coming into the 200-day moving average. So I'll get into the details here in a minute. But the thing that we need to realize is that we're going to go in. I'm going to talk about some tariffs and taxation is really big. The tax. We'll start with taxation first. It is incredibly important. I've got some notes here that I put together that we're going to have to look at, because I think what Trump is trying to put together here is actually a very strategic restructuring of the government. And whenever you restructure something, whether it's a company like that, he's even warned us about pain. We're seeing, if you think this is pain that we're seeing on the screen right now, this is not pain. I mean, you go back to previous sell-offs. It's vertically down, at least for the last 3 weeks. That chart I was just showing you, I'll go through all the details here in a minute. But the reality is, with Doge coming in and cleaning house on all of the employees and of the government, I mean, even Bill Clinton and Gore actually X'd out 400,000 government employees back in the day. And there was a time, and that was Newt Gingrich was Speaker of the House at the time, and there was this whole push in downsizing the government. Well, we know where we are today. So what they're trying to do is get back to square one. And I'm going to talk a little bit about something I put in my 2024 outlook. Is there's two equations that have to happen. We need to accelerate GDP growth, and then we need to also cut back government expenses. And the formula that I put together in 2024 was that we would need to actually cut government expenses by about 10%, increase GDP from 2 to about 3.5, and that magic number running over a couple of years, believe it or not, starts to pay off a lot of the debt that we're seeing right now. And I have to agree with things that I've seen around, is that when we all know this, we've talked about it for years, at the current path that the U.S. government's on in spending and deficits, we're done, and very soon we end up in Zimbabwe and we have 2,000% inflation, and the U.S. dollar goes to zero. Right? It's already almost at zero if you look at it in real terms. But my point here is that what we're seeing here is this restructuring. This restructuring is going to be fairly painful, I think, and I've been warning about this in the Substack newsletter, is that what I'm really seeing, I mentioned one night in a little snarky little line that in private conversations, my biggest concern is that all these gyrations are going to cause a complete collapse, because there's a couple of things that you start turning things off. Musk has said it, hey, we might turn off the wrong thing, we'll just turn it back on. Well, we saw what happened when we turned the whole thing off in 2020, right? So things start to break really, really quick. So the question is through the strategy that we're seeing here, is the Trump tax cuts are going to be really important. If those don't get passed, you got jokers like Massey and some people that are still blocking, like, get on board, let's go forward. Maybe a few Democrats to get on board to do that as well. But if we don't do this, then we get in a complete collapse, and that's obviously, there's nothing good to come out of that. So that's going to be number one. They're doing the CR bill, which is kind of interesting right now. There's a lot of stuff. I'll try not to go too deep at the moment, but I do want to continue this conversation here for just a few more minutes. So the tax cuts are number one, because if we don't get those continued, or Trump wants to make them permanent, if that doesn't happen, that will be the largest tax increase in history. So that's one of the things that you're going to need to watch, all of us. If that fails, that could set off a complete bomb. And then this line that we're seeing on the chart here, I'll just pop that up. This little line over here, that thing just goes straight down to the 200 minimum. It's a complete collapse if that doesn't happen. But I think the CR bill will carry us through that. And then let me talk just a couple minutes about some of the other things. I think there's one of the things I've also mentioned in Substack is what we're trying to do is, let's say they get rid of 600,000, maybe 1 million jobs in the government. It's been obvious to me anyway that the Biden administration was cooking the books on the employment situation by hiring in the government. So the government jobs where the growth was. Now we've got the opposite. We're going to cut off the government jobs, and then we've got expenditures being cut. That also means there's a big. That's the biggest employer in the country is the government. So what we're looking at is that once that starts to come out, that's going to not flow through the economy. There's going to be disruptions of cash flows and everything else. And this is what I have talked about in the Substack. I haven't had a chance to really break it down. But what we're doing is transitioning from public to private. So a lot of these things that were being done in the government, some of this stuff will transfer over to the private from the public jobs. And that is, I believe, what Trump was talking about in his interview on Fox over the weekend, is that we're in a transitional period. Now, how long does that take? I don't know. What are the consequences? I don't know that either. Nobody does. Markets are, as always, acting very emotional. And last night's Substack, I talked about how this is one of the more emotional markets I've seen for a while, especially with no backdrop, meaning there's no information talking about tariffs. Nobody knows what the effects of the tariffs are. They came in a couple days ago, and they're with Mexico and with Canada, which that situation is getting interesting, but nothing's really been disruptive yet. But the markets are acting. Let's say, they're anticipating that there is going to be an impact, and there probably is. I happen to think, and I'll show you in the technicals here in a few minutes. I know I'm going on for a while on this particular scenario, but I feel like it's important to understand that tax cuts first, the tariffs come in, the tariffs will start to replace a lot of income. And, the external revenue service is what Trump is talking about, and he's talking about lowering taxes and maybe getting rid of taxes. I think I asked a friend the other day that isn't totally on board, and I said, so would you be willing to pay more for stuff if you didn't have to pay taxes? And he's like, yeah, sure, absolutely. And that's the point of all this. So my expectation here is that once the tariffs, we start to see the real effects of all these things. This is what I was talking about in my headline, even in Substack last night, is there's no reality behind what people are talking about. They're anticipating. We'll have to wait and see, and that's going to take a couple quarters. So I kind of see this as just looking at my notes here, that so we have basically a three-pronged approach going on. We've got hopefully tax cuts, we've got the tariffs coming in, which are income, and then we have the spending cuts. And this is the formula, folks, for success. Can it pull it off? I don't know. That's so I'm kind of on board with that, but the effects in the markets are going to be fairly substantial. So let's talk about what I'm going to do for the balance here. How long we've been on? Well, not too bad, only 13 minutes. So let's talk about, I'll go through long-term on the S&P. We'll probably bring up the NASDAQ. I've got a few notes on this, but as always, when I do this analysis, it will be real time, and I'll bring stuff out. And I do want to show you, those of you that are getting the, real quick, that are getting the Substack, you've seen these new fact sheets that are being generated. I'm going to generate one for tonight. We'll do one together so you can see it. You can read about it later in the Substack. But let's go ahead and go into the longer term technicals, and we'll go through a typical scenario when I'm talking about, looking at the quarterly charts. And we haven't done something like this for a while, folks. I think this is the first YouTube video I've done for maybe maybe going back to November. I'm not sure about that. There might have been one in early December. It's been a while. So let's go ahead and go to this. So this is a weekly chart. Let's switch this over to monthly. Let's start with monthly. And you'll start to see some of the scenario that's unfolding here. Let's bring up the indicators. What's being forecasted right now is a decline into September, October of this year. So this is not going to be a straight line down. There are some support levels that I'll talk about here. But the realities is that the algos are predicting that we're going to at least trade down to a 21-month moving average. That currently is at right at 5,200 to be exact right now, 5,240. So we're probably going to decline to there, and then we get into one of these classic jobs here. Now, let's see, some of these elements here I haven't used for a while, so bear with me if I get caught up into let's draw in some of these expectations here. Yeah, so this is 2024. This is the 23 rally. Of course, we had that little dip. So I'm arguing from a secular viewpoint that we're probably going to get something that maybe even extends down to this 21-month moving average, and then we get some kind of wedge here that sets up. We'll just draw this in, and this will be a correctional phase. Now, if we look at this chart, if I draw this line up here, this is 2027, so this is a couple years. This could go on for a while, where we're seeing the market start to get locked into this range. So all the fun that folks had here in 23 and 24 and advancing their money, it's now going to get down to the level where we're going to see, just a second here. I'm just trying to remember how to use this. Okay. So what I'm looking at then is something where we get into a big consolidation range right into where I drew this circle here. This is most likely a scenario. Like I said, if we start to kind of look at the timeline, this is monthly, then we get into, by the way, this was that fib target that came out back here in late 23. That's when this came in at 6,100. So, but this scenario here is what I'm talking about, where we probably come down close to this 21-month. We get a rebound, some kind of 40 to 60% rebound. Then we get maybe it even gets very complex. Because I think what we're talking about here really is something that is going to be very interesting from the standpoint of the markets, from the standpoint of the market. Sorry, this thing. From the standpoint of the markets going to have to reconcile all this change and government spending and all this. So we've enjoyed this big rally, and I'm actually thinking that this is probably some kind of wave 4, but it's a massive wave 4 that could last a couple years, and we'll start to go from there. Let me punt. Let's go to now this is the cash S&P we're looking at. So there is a somewhat ominous pattern that we saw. We got one of these a couple years ago, and it was right here. We got it in 22 when we had that really nasty market. We got an outside reversal on the quarterly, then we had two more quarters down, then finally a reversal. Well, what we're looking at right now is we do have a outside bar building here on a quarterly basis, so this is huge. But if we look at the moving averages, we look at the basic overall structure of the markets here, is we have a similar type situation. The 10 quarter moving average, see if I can get some values here for you. 10 is 40, bear with me, 49.38. If we go back to the monthly, we were just looking at 1 month. If we come back over here, it's 52.44 is the 10 month. So what we're looking at is probably 50, we'll call it 53 to 49.50 would be the range that we would end up. Now we could go straight down from here. There's the algos are trying to show a bounce. If you've been reading the Substack newsletter on the dailies keep, it's almost like it keeps forecasting. It's forecasting what I call an echo bounce, but we don't get anything. Every day we come in and we get hammered again for another 1.5%, 2%, maybe. I think today was a 0.75% drop. But the reality is what we're seeing here is a 0.75 drop, not 0.75. So, but what we're seeing here is this, everything is pointing to this level. Whether we just go straight down, chances are we're going to end this quarter here. It is right now what, the 11th. So we got 20 more days in this month. I think probably about 12 more trading days. If we close down in the lower half of this bar on the, going back to the quarterly real quick here. Going back to the quarterly, if we close down around 50, we'll call it 57.50 or less, we're going to have an outside reversal. You can see that the algos and the red dot indicator is showing that we come down toward this pattern here, which is at 5,200 on the quarterly, and then possibly 4,900. So we'll target that range right now. If you want to know, at least from the standpoint of what's going to happen on the shorter term, then sign up for the Substack. It's $8 a month, so it's not a lot. But this is some of the realities. But if we look at let me get off screen here so we can see this full deal here. If we look at the algos here on the market, we'll notice on the 3 month we actually had a target here of just trying to get to the targets of 61.16. So we had similar monthly and quarterly targets, and now we're seeing this reversal pattern, and you can see the algos are suggesting actually that once again we're coming into 27 before we actually start to see any type of real reprieve here from the standpoint of the markets hitting a bottom. So this is where we're going to be at, folks. And I'm actually going to tell you right now that probably the best thing to do, I don't have any graphics to put up on the screen, but you're going to have to be a good stock picker. You try to play the indexes here, it's going to get harder and harder to be an index trader, at least from a positioning, maybe a short-term swing trader, but you start trying to figure out these trends, it's going to get really difficult. This will not be for amateurs. This will be the real stuff. And when it comes to individual stocks, there's going to be a big rotation. I guess I could do about a 3-hour stream tonight. Let's see where are we at here right now. we're about halfway through. But the realities are, those of you hoping for small caps ain't going to happen. I've been telling you for years that this asset classes will not work out in the long run. There's still some issues. Maybe it's possible. I think I could do a whole show just on the yield curve and interest rates. But I covered these long-term indices pretty well. Like I said, for microanalysis, get the Substack. You can go to kendallreport.substack.com and get that. And that's where the micro day-to-day stuff will happen and intermediate. But this longer-term pattern is substantial. It looks like we could spend, I'm going to go with a year to year and a half plus in this consolidation mode. And just to tie it together with my first part of what I talked about tonight, is really what we're looking at is this reconstruction of the government and this transition period. I think it goes this is a big task. We got this, 36 trillion debt that we need to deal with. And there's just so much stuff. It's now or never, folks. And, it's fascinating to me anyway, that folks that are screaming about the Doge cuts and all this stuff, that it's amazing that people don't get where we are. But, for the most part, not you folks, of course, but most of the non-participating public have no clue what's going on. And these are the people that are easily, I guess, convinced by these things. But this is a serious situation we have. To me, it looks like we got the 10-quarter possibility. I'm just going to give you another number. If that down the road, if that broke, we could see 4,600 on the S&P. This is the cash market, and this would carry us once again well into 26. Now, just real quick, I want to point out that one of the things I've been talking about on the Substack as well, my expectations are we're going to see a negative GDP quarter in Q3, possibly in Q4, getting a technical recession, and it could carry into Q1 of 26. I'm not very optimistic when it comes to this reconstruction and this continuation of growth that we've seen, as I pointed out early on. So if you came in late, go back and watch the replay when I'm done. I went through quite a bit of detail. So let's do this. I think probably the next thing, let me look at some of your comments here. Yeah, I appreciate it, everybody's. It's nice to be back. I wish I could do the daily like the old days. Not going to happen. But maybe we can get some of these in the next few weeks. We can get some more of these. Somebody's saying like to see the CPI projections. That's really good. That'd be a good transition from these indexes. So let's go over there and I hate all these indexes. I can never find this. I've got to get this to monthly, and then I think we'll get some numbers that come out here. Yeah, so let's just bring up this chart here. Let me get off screen. So this is a couple of things that we need to look at. This is a CPI, which will come out tomorrow. Looks like it's going to be a little stable. There is a bit of a dip being projected here as we come into June, but then we see the increase. So I've asked this question before, is that what we're seeing here, are we seeing a little bit of a dip because of what's going on right now from the standpoint of the I guess, payments that are being cut off and the austerity that's happening, then are we seeing the tariffs start to kick in July? And the forecast here is for a move up from where we are now up to about 3%, and we're currently pushing the 2.4. So not a big deal, maybe a 0.5%, but we're starting to see some trends toward higher inflation. Of course, it's interesting, the stuff that's out there right now is just talking about. Trump said from day one prices would go down. Prices aren't going to. They actually depends on what you're looking at. Some things are starting to move around, but the deregulation, there's so much that we could go on about here. But I think the setup that I put in the beginning are the things to watch for: tax cuts, the tariffs, and then the expenditure cutbacks, and all of those set up good formula for the future. But as we look at the CPI here, it is being forecasted to kind of stay stable, maybe down a little bit as we get into maybe the April numbers. And then after that, maybe this is where we start to see the effects of the tariffs and all of that. The key effect that's going to be interesting, and I hope that there's good transparency on this number, is that we can see what monies are coming in the external revenue service, otherwise the tariffs. If we can see that, that would be good. Every time I see Harold Lutnick, our Commerce Secretary, I wanted to work for him so bad back in the late 90s. I probably would have been sitting in the tower when they got taken out that day. That was one of the most amazing bond houses ever. This guy's a legend in my mind. But the realities of everything we're looking at here I think there's going to be a lot of pain. Like I said, my biggest concern is something breaks that shouldn't break, and that there's more turmoil than what folks are expecting. I don't think anybody knows what's going to happen. I hope for the country and for everybody that it goes well and we have a nice transition in the economy from where we are, and that the tariffs work. There are a lot of things to look at, because if you look at the worst, I spent a lot of time studying the 1877 through pretty much up into World War I. I've spent a fair amount of time looking at that period, and that was when McKinley was in the 1870s. You had the big break where you had the railroad collapse. It was the worst. People always talk about 1929, but 1870s were way worse. And if you're in the UK during that time, it was even worse in Europe. It was much more protracted, but it was one of the longest depressions that there has been ever. And that was, banking collapses, all kinds of stuff. It's a very interesting time. So if you want to entertain yourself sometime, go through and study that era. That is much more interesting. 1929 has its things, but to me, 1870s is a much better time. I was on a very large conference call back in 2008, and I had pointed out that the Federal Reserve did the exact same mistake in 2008 that they did in the 1877 period, because they actually were charging, the Fed at the time in 2008 and the GFC were actually putting assets into the marketplace, but they were being done in repos, and they were actually sucking money out of the economy rather than putting things in. So everybody that was participating there got worse and worse. So as you come into 2008, and by the time we got to the Lehman crisis, they had sucked every bit of liquidity out of the system. And then TARP and some other things actually changed that, and that's how we got out of that situation. But I think, just to kind of summarize here, I think this situation we're in is going to be way more difficult than some of these other scenarios. And anytime you make these giant moves in the economy and in the government, this is a big one. And you can see that. I like something that Musk said one day. He goes, when they were running PayPal, you could always see who the biggest fraudsters were, because they were the people that were yelling the loudest about what was going on. And we're seeing the noise that's coming out of this downsizing of the bureaucracy is deafening at the moment. So there's definitely a bunch of fraud. They've hit on the right spot, in my opinion, but this is going to be a big deal. So let's go ahead. Let's see here. Maybe we'll do. I'm just looking at timing here, folks. I'd like to keep these under an hour. Get about 20 minutes to go, roughly. Actually, about 25. So the time's going along pretty good. Yeah. So let's go ahead and. I am just going to this is still a 1 month chart, and I'm going to bring this into a little focus here. Let me resize this. Yeah, let's go all the way back to the beginning of my career. Let me get off the screen. So this was where my cursor is here, was way back in 1981. And I always joke, I started in 79, watched rates go all the way up to 15%, 15 and a half. This is on a 10-year. The 30-year went up to, I think, 16 and a quarter at the time. And we had Fed funds at roughly 16%, with also we had the Fed funds. There was a penalty on the Fed funds that there was a 4% surcharge. So effectively, they were 21% back in the day. And I've had some interesting conversation flashing back with Dr. Baker. A couple years ago, we did a little podcast together, but we've had some conversations about that period of time and what it was like. But we watched it go from that ultimately all the way down to basically not on the 10-year, but down to around the 0.75%, and Fed funds at zero. So we went from 21 to zero. But this is kind of interesting, and I haven't shown this. This is a 1 month target range, and there's some new targets here, which real quick, I'm going to draw in a couple of things so you can see this, but I think it'll be interesting. Interesting to look at here. So this is most likely we're going to call this a fourth wave. We've got some new Fibonacci targets here, and I can't get to them right now, but I'll bring this up. Here I can. 535, 6%, and 6.4. Previously, we had these crazy these projections coming out at these higher levels. But this is, once again, we're looking at this fifth wave, and if we did a measurement, whenever I use this tool, it freezes the screen, so I can't get the numbers. But if we were easily going to get up into this second number here, we could see 6% on the 10-year. So let's talk about that. On the short term, we're probably stabilizing, but if we look at this thing from a purely technical viewpoint, what we're seeing here is, let's zoom in on this a little bit, and I want to bring up the algos. Those of you that have the indicators here, you can see that the projections are for the stability. You can see the WTARs are all kind of formatting us between 350 and the 410 level. We're probably going to go into some kind of sideways. This is a new Fibonacci target. This is on a monthly. So this is a little bit longer, but this is an A, B, C, D, E type pattern from an Elliott standpoint. And there's probably one more high in here. And what would cause that, you would say? And we'd have to go with the, inflation coming back, or, that the effort to downsize this government fails. We're at a very scary place if like I said in the opening, if the tax cuts, the tariffs don't work, and we don't get this downsize of we'll call the three-legged approach, downsizing the expenditures of the government, getting the debt to get paid down, getting the tax cuts to regenerate. The tax cuts will generate the necessary income in the economy, which to transfer, which I talked about earlier, transfer from the private, from the public to the private, and that's going to require a lot of capital. And we're seeing all kinds of folks. I think we're getting close to $2 trillion of proposed new investments in the country. So the money is coming in. We just got to get the other two legs working. Yeah, I see. I got the music edition. You have wrongly predicted the moves in the 10-year for years now. Really? Well, you might want to go watch a few videos. I suspect you don't know what you're talking about there. Yeah, so you that's pretty funny because I know the history, and I have most of it in writing. So I don't know some of this setup. Yeah, I don't know what that the logo is. I'm not seeing it on the screen right now, so I apologize for that. So, but anyway, that's the interest rate. So we're going to get in. I'm going to get into a loop. We got 15 minutes. Let's go and let's generate. I want to show you a couple things, folks. Let's see if I can find it. So let me get off screen. This is a project that I am working on right now, and many of you have seen seen this. Yeah, let me see if I can. Let me see if I can mute out this. Yeah, so let me know, the logo should have went away, so I've got that fixed. But this project I'm working on right now, it's a new interface which is going to generate these sheets, and I don't know when a release is going to be. There's quite a few bugs at the moment, but it's coming along. This is the sheets that I've been developing over the past week, so past 3 months actually. And what I'm going to show you how these work. I was going to put the code out there with people that have the indicators, but you need to have all the indicators to be able to do this. But I built all the probabilities, so let me just come on screen and let's talk about this. I will get a pre-registered list if you're interested in getting this product. It's not going to be a lot per month, but there's a couple things that I've developed here which are absolutely amazing is this sheet, which gives us probabilities. It gives you a directional. This is from yesterday. Bitcoin, 60% probability of upward move. We actually went above RXT forecast. I think Bitcoin last time I looked was up like 4,000. You get a stampede going in. We traded right down to some of the support levels that were critical going back to yesterday's analysis. But this report is being generated. I'm using Claude from Anthropic, and I'm using 3.7 Sonnet from the technology. I've built in the API to generate this from the software, all those kind of things. But I'm just going to actually show you how I do this, because this is for me has been quite phenomenal. So let's go ahead and go full screen. So one of the things that we have to do here is we have to get to a daily model. So if you have the indicators, you're going to be able to do this. Okay, you'll just cut and paste. What I've built it is you cut and paste this into a data block, and you just hit analyze, and it's going to kick out all the numbers plus the second phase, which I've got developed, but it's coming along slower than I'd like, but it's just software. It's just the way it works, is actually setting up trading strategies around the market grid, directional movements, all kinds of stuff, using AI to build some things. Like I said, what I've been doing, my late night, like I told you, I went to bed at 6 a.m. Eastern time last night, that just working on this project. Matter of fact, it sucked me dry. I didn't start the commentary or the Substack until like 12:30 local time last night. So that was kind of bad because I got sucked into the development of this thing. But let's just get to a daily. And what I'm going to do to start with, you see the data on the side here. All I have to do is highlight. I always forget I'm not on a PC, so I'm on a Mac. You highlight this. I just do Alt-C, so I copy it into the clipboard. What my plan is that you'll be able to just have a screen. I'm planning on building a screen scraper. I'm working on stuff so it'll just go and grab it. All you have to do is tell it to grab the data or something. We'll figure that out. But for right now, it's a manual process. But I'm going to show you how that works. So this is the magic page. All I have to do is the prompt to fire off this script that's up here is simple as this: update using this data. You can't see my prompt line here. Bear with me. Yeah, you can see it now at the very bottom of this page. Update this using this data. That's it. Because what I've done, I did something interesting, folks, and this has been hang on, I'm just trying to get this. This is something interesting that I've done. I've basically taught, I put a script together that thinks like Bob Kendall, doing analysis like I do, and it will go through, and I have a couple scripts that I've done that does full analysis of every aspect of everything that I have on the screen. So I'm not going to go full detail, but I want you to see this work. To me, it's the coolest thing ever. And but you need to have this script that does all the calculations, and all that stuff is built in. So but let's go ahead and let's run it and see what we get. Yeah, no, let somebody go. Todd's going. This is cool. This is like the coolest thing I think I've ever done. I have. I'm actually building this software. We'll see if I get it fully done, but I'm using something called Replit, and it actually gives you the ability. It's an agent. So I'm building this with a software agent. I have been working on this for about 2 weeks. I've got a lot of this thing working. It's very, very close to being able to deploy and put out to you folks. I'm super excited about this. So let's go ahead. So all I have to do down in this script line here, I'm just doing an Alt V, and you'll see. Let me get out of the way. You'll see at the bottom all that data that I copy. Here's ppm3 close. Here's all the data. Just giving me low targets, all the data I just pulled out of that data window, just put it right in there. All I have to do now is hit this, and it's going to start calculating. It's going to build. That was the S&P daily that I put in. I've actually put in 5-minute data, and it does some crazy stuff with that. The problem I got into, I was using it to trade one day, and I burned out all my prompts in like in an hour, re-updating 5 minutes. But you're saying this thing, everything's being calculated. It's giving all the status of everything. So this is just generating the HTML, and when it's done, we'll see what we get. Right now, the S&P is up 1275, up 0.22 on the session. But we've seen this movie before where we see higher prices overnight, then it gets clobbered. I actually mentioned this in Substack a few, I don't know, last week sometime, is look for an inversion. Instead of lower and then moving higher, it's going to invert and going higher than moving lower. And that's what we've seen. So takes a few minutes. There's actually a lot of calcs going on. It's pretty close to done. This is like one of the coolest projects, and I love working at night. So I've always gone to bed at 2 and 3 a.m. local time. I'm now on California time because we live in Arizona and don't have it. Yeah, I have use. Yeah, Sleeper Cell. I want you to send me an email, info@Kindle Report. I want to talk to you. I have used Cursor.io. Okay, here we go. Here's the report. All done. 63% downside for tomorrow. We'll see. Once again, let me see if I can get this to so you can see the whole report. So let's take a look at this. We got 5609 where we're trading right now. 5590 is 60. Yeah, 52% target on that. Let's see what the predicted high-low is. 5647. That's a pretty big number. And 5468. And what it's doing right now, some of the rules that I put in there is if the PPMs are at certain levels, then it's going to increase the volatility because we've seen that volatility increase. Let me come back on. We've seen that volatility increase over the past, we'll say, couple weeks, right? So now what it's doing is it's going with an S2R2. So if you're familiar with the WaveTech indicators, we generate this market grid every day, and this is giving you the probabilities for the markets to get hit. Well, I put in some logic based on that to also do a prediction of the high-low. So it's got a very broad range, which is, we've seen some crazy volatility lately. So right now it's 50, sorry, it's small on this end, 54, 54.69, 56.47. Wow, just about 200 points on the range, but it's given us right now 63% to the downside. Today it was 55% downside. We've definitely got downside, so it looks like that's continuing. But I put in the code to actually determine. There's some code that I've process that I've used for years on how to predict the high low of the next day, and it's within context of the market grid is what I've been doing for years. Typically in certain types of environments, it knows that it should be S1, R2. If it's a downward, a lot of times R2, S1. In this case, the volatility is so high, it's just because of the code that I put in there, is it's doing an S2, R2 range, and then it's picking those numbers. And it's also got the WaveTech targets here, 57.99, 58% probability of low target 3 hitting, and we may have already hit that, I think. So, but all of the Fibonacci targets, it figures out the probabilities of these things being reached. And I have built, just so you folks know, I have built an entire strategy. I have an entire booklet that I'm putting together right now that gives you strategies on how to use this sheet for day trading, for swing trading, for getting entries into the market. What I'm spending my time on, folks, I miss being here live with you folks like we are right now. We're right at about an hour, but this is a way better use of my time and giving you folks, somebody once said, Bob, teach us how to fish, and so this process that I'm putting together is building all the, we used to joke when we put the portfolio management tool together back in the day, that we were going to call it Virtual Bob. Well, this is Virtual Bob. And I've really spent a lot of time. I have some huge scripts that I built and prompts that I built, some of them in excess of 400 to 500 words and calculations to be done, still verifying that it's getting everything. But for me, my passion has always been in software. My first software program I built in 1992, and it was on TradeStation. TradeStation still has user studies in its library that I built back in 1992, 94, some of those. I was actually upset that they kind of heisted them from me. And anyway, there's a long story behind that, not to be told tonight. But the bottom line is what I want to do is get everything so Virtual Bob can show up. And we're at a phase now also, folks, where I think within a year or two, if you were to see me out and about, this is my hat, my AI hat. I live this stuff, okay? And the goals are here is to start to build out software. I've also been doing some stuff with our WaveTech. Matter of fact, I'll bring that up for a minute. Our WaveTech platform, this thing is going to get rebuilt through this as well, building probabilities for portfolios, allocation. I noticed something earlier today. It's interesting. One of the only strategies that is showing, let me just bring this up. This strategy here, all the stock selection was done by using AI. So these are the returns. It's actually up 3.3%. It only has two long positions right now. It's 77% in cash. But all of these stocks were chose by a prompt that was done through AI, taking one of our screens. I mean, folks, the world's changing, and I know a lot of folks know this, but this is a really, really big world. If you look at some of these stocks that are here, they're not AI stocks. I mean, they really aren't. And there's only two of them long right now. Let me just see which two are long. Open positions. We've got GILD and IBM. And IBM has got a 52% profit. Now, I built this last fall, so a lot of these trades have been on since actually this one. Both of these trades came in. It might have been August when I was building this. These came in at September 3rd of last year. But let's come back here. But back to these sheets. This is the world I want to live in. I've been wanting to do this, and now whoever mentioned the Cursor.io, I'm serious. I want to talk to you. I'm actually going to be recruiting some folks. If you're on the private Discord, we can talk that way if you're on there. But just let me know who you are. info@kindlereport.com. Just trying to see who this is. Yeah, I see Bo's asking, once fully developed, do you anticipate it working for longer time frames? I'm not sure if you're talking about the data sheets or the yeah. So I put in monthly data, I put in weekly data. There is a plan to try to set up, some forward-looking scenario. Yeah, I see Sleeper Call 13. Yeah. The email is info@kindlereport.com. That's the best way to get that. Okay. Yeah. So, yeah. So I see Green Garden. I got a call. I've kind of got a reprieve. Folks, I've been living in two cities for the last 6 months. So I've been 4 days here in this city, and then I go to another city for the 3 days, and I've been back and forth, and it's been very disruptive. And so that, for the moment, is changing on a short-term basis. Not sure longer term what things are going to look like, but for now, I've got some bandwidth to play with here. But this, folks, I'm telling you, this is like this is a game changer, a complete and utter game changer. And I think I will make a quick comment that some of the AI companies, since the DeepSeek event happened, it's been almost 2 months ago now, when all of the AI folks got scared, they started throwing stuff up against the wall and releasing models. I could do a whole video on these different models that are out there, and they're just not. They're hallucinating really bad. There's still, for me, I don't use chat a lot. Mostly I use Claude. Claude's way better. The 3.7 Sonnet is like amazing. It's getting better and better at that. So yeah. So yeah, Green Garden. I was just putting an email together for everybody that had signed up for the symposium. We're going to figure out how to satisfy that and get a couple of things done. Yeah, so what is this? Somebody, it's an awful stock for a portfolio. Which one? Which one is that, JM? Just curious about that thought. But yeah, folks, I am like super excited. I'll take a break from doing this, probably about 2 hours, and I work pretty much 8. I work about 6 to 8 hours early in the day, and then I work 6 to 8 hours at night. Typically get in between 10 and 12 hours a day, late at night. And so I spend the evenings with family, and it works out pretty good. But listen, this was fun being on here. going through this stuff. I hope you guys found this useful. You know, tell people to come and watch the video if you know folks. Please share these videos and subscribe if you haven't. And if you don't have the indicators, you should get them because they're going to become really important, especially when I release this product. And it will be, I mean, like I said, I've got this thing mostly working, okay? And it's pretty close. And the only thing I'm probably going to have to require until I figure out, there's going to be a free version. So you'll be able to get reports, a certain amount of reports for free. And then there's 2 other tiers that you can get to. One of the issues is using the API. There's a cost to hitting the API. So I'm considering a level that you can use your own API. You just plug it in and the software knows how to input it. And if you know what that means, you know what it means. If you don't, you don't. There'll be plenty of tutorials and things on how to use it. But this process that I developed here, for me, is a game changer in looking at strategies. The one thing that's also kind of interesting, real quick, I wonder if I can, I'm going to try to make this a bit bigger, okay, and then I'll stop going on about this. Yeah, down here where the ppms are, I put in some criteria on what the values mean on each one. So you have ppm and you have first and second derivative, and ppm1 you can see right now on it's at 0.6905, which is it has a EXT qualification on it. This little line down here is I'll just see if I can highlight it. Yeah, right here, that's giving you the context, what is likely to project an extended down leg. So right now, S&P continues to be in this extended down leg. And like I said, we've inverted the whole scenario. We've been seeing positive at night, turning south in the morning. We've got CPI and PPI coming out the next couple of days. Maybe that matters. But right now, the sheet still is showing 63% probability of a down mode. So far, the most drastic prediction I've seen come out of that is around 75%, but 63 is a pretty substantial probability for this thing going. So, like I said, this was kind of a little bit of a reveal, and I think if you get the Substack right now, there's sheets for the S&P, there'd be a sheet for NASDAQ, and then there'll be a sheet for Bitcoin. And, so what's going to be nice is this new platform, if I bring that up, this new platform, which is being shown right here, this will give you the ability to run any stock, anything from anywhere on the planet. As long as you have the WaveTech, all the indicator package, and then you have this, it's going to be required that you have that. It's possible that I will get this thing to the next level where you don't even have to have that. You'll be able to get all the access to these sheets without having that data. So there'll be a different pricing mechanism if that happens. But this is like really grassroots that I've done here. And, so if anybody listening or going to listen to this, if you have expertise, whether it's working with any of these agents or programming, any of that sort, I'm actually going to put a community effort out on this, and I'll just send me an email, info@kendallreport.com, and I'm going to put something together where you can just click on a link and submit your name and some information I'll put something together like that. Right now, it's myself and the IT guy that I work with on my other software. I'm running this show by myself at the moment. So, but things that you should do: get the indicators. KendallReport.com/indicators will get you to find out that. If you're interested in our software on the portfolio management, you can. You have to. I'm not even going to put that out there at the moment, but you can go to KendallReport.com, the website, and scroll through there and find a way to find out more there. And then ultimately, this is going to be a new product. Right now, it's called WaveTech Pivot Pro. It's really about pivot points and trading through pivot points. So one of the comments that was made, I think Bo or somebody made, is that there is the potential for formatting for a longer term. Yeah, so JM, that's a good question. I think since I'm using Replit, I'd have to go through, but it's in React for the most part, is what we're using for a lot of this stuff, and Java. So those are the two things. Yeah, they did. I've had to basically shut everything down because of family issues. So we just kind of went into dormant. But this is me coming back out, talking about some of the software ambitions that I have. I actually think when I have a whole presentation. So what I'm hoping for is I'll get some emails from some of you folks that have some expertise. We'll get on a Zoom meeting. We'll talk about it. I have multi-level participation potentially in revenue shares, all kinds of stuff that I'm putting together. So I'm excited about this because, when you get old like me, I'll be 73 this year. You need to have something to look forward to. So this does it for me. I see somebody, YouTube include daily probabilities. Yeah, so David, I don't know, get the Substack. For the most part, all these sheets are in there. I'm talking about a lot of this stuff. I'm trying to figure out how to scale back the Substack. I've scaled it a little bit, but I want to get it pretty close to something. I did something here let me go off screen, and I've been contemplating just going to something like this where I've got a mocked up chart and then have like a paragraph here of what to do, maybe scaling it way, way back with some other commentary. So we'll see how this all plays out. All right, folks, we spent, an hour and 15 minutes. Thank you so much. This was awesome hanging out with everybody again. We've had a couple hundred people for not doing a live stream for a while. That's pretty good, I reckon. Yeah, so thanks again. Please comment about this stuff that I showed today. Give me some enthusiasm. Yeah. Raul Paul. Yeah, people have tried to get me to talk with him. He knows my good buddy Hugh Hendry, and yeah, and I agree. 73 is not old. 100 is. I agree with that. Hey, I could still be on the Social Security payroll at 150. Who knows? Anything's possible. Evidently, there's millions of people that have made it there. So that's awesome. So anyway, folks, have a great rest of your evening. Good day trading. Get the Substack, KendallReport.substack.com. $8 a month. Like I said, it usually comes out before. It always comes out before the opening. Last night, I think it was released at 6 a.m. New York time. So it's usually now, I'm 3 hours behind New York. I was too, so it's coming out a little bit later. Anyway, folks, thanks for hanging out. I appreciate it. Yeah, I probably did in mid 24 say that. Just if you use them, all right, you would have known that the algo's reversed. We actually hit some key fib targets, and we started to get downward targets again. So, yeah, so they update. One snapshot, yeah, there's more to it in using them. So you can't just take a snapshot and say, oh, it said this in this day, so therefore it's wrong. So anyway, thanks again. It's fun seeing some of these names that are around. See Monica, Zoltan, I know those names. David Ford, Mr. Yeah, I see a lot of familiar names. It's good to see you folks. So anyway, I'll try to possibly do something again next week. I don't think there'll be anything else this week, but next week, maybe Tuesdays will be a live stream, and we'll go from there. Anyway, folks, thanks for watching. Appreciate it. We'll talk to you next time.